let's start with Warner Brothers Discovery. You know, clearly they're making changes, planning to make a lot more changes, and there's, you know, some uncertainty about where this is all going. What's your take?
Right. I mean, the first thing we have to do is, I think, almost step back from the amount of subscribers gained. So if we look at the subs gained, right, they gained 1.7 million. That's not much. They actually, according to their new way that they report, they lost about 300,000 in the domestic market. But I think what we have to look at, and what David Zaslav's CEO, David Zaslav's real game is what is the actual value of this content? How do we go through HBO Max and cull some of it, and Discovery Plus and cull some of it, in order to really ensure that we're hitting profitability on the fastest path that we can for our shareholders? When we talk about David Zaslav and his team's approach to streaming, it's different from what Netflix is doing and what Disney is doing, where they're increasing their content spend constantly and constantly. David Zaslav does not want to be in the content spend wars, as he likes to say it. Instead, he wants to say, we want to get to profitability. We want to get the most value for our dollar. And so what we're really going to see play out is how well that EBITDA and how well that OIBDA really comes into the case for Warner Brothers Discovery going forward.
What are you expecting Zaslav to do as they work to merge these two platforms? You know, there's talk about a big culling potentially of HBO Max. They're taking movies out of the rotation that are already filmed because they don't want to spend money on marketing. I'm thinking of the new Batgirl movie, which, as I understand it, has already been shot.
Right. I mean, the key word right now is amortization. Amortization, amortization. When you're looking at the amount of debt that David Zaslav and his team brought in, you're looking at what you can do specifically with HBO Max. I think what we're going to see happen is less of a culling than press made it seem out to be, that rumors made out to be over the last 2 days. It's been a lot on Twitter as analysts and industry insiders and reporters try to guess at what's going to happen with HBO Max. This report, the earnings report today, was actually a little bit beneficial in that way. What we're seeing is that HBO Max skews male, and we're seeing that Discovery Plus skews female. And before Discovery Plus came in, the HBO Max idea was to invest in more female-oriented content. So you have like the cooking show with Selena Gomez, and you have the new Gossip Girl, and you have all these types of shows that appeal to a different audience to really widen that total addressable market. But as Discovery Plus comes in, they're saying, well, we're already making this content. It's doing well on cable. It is a brand in and of itself. So we're going to bring some of that to HBO Max. And Casey Bloys, the visionary leader who oversees content for HBO and HBO Max, can focus on scripted content and scripted fare that works. So I actually think we're not going to see as much of a call as reports made it out to be. But that being said, I mean, I think when we talk about streaming services, there is far too much content. We're in an oversaturated market, and it's never been easier for a subscriber to say, this is mediocre and this is great. So if content isn't performing, why keep it on the platform is kind of the thought strategy that Warner Brothers Discovery executives seem to be having.
Okay, so let's talk about Paramount Plus. As Ed said, this service has been a minnow thus far, but it is racking up subscribers. The bottom line doesn't necessarily look great so far. You know, Top Gun, Yellowstone, which is one of my favorite shows. Are people going to...
Right, they gained 1.7 million. That's not much. They actually, according to their new way that they report, they lost about 300,000 in the domestic market. But I think what we have to look at, and what David...
Pay for 4 streaming services, though?
Before inflation, before interest rates started hiking, I would say yes in the United States. Globally, we don't know. I think now we're looking at closer to 2 to 3 over the next little bit as people choose where they want to put their credit card dollars every single month. But that being said, I would say that Paramount, everyone has kind of looked at Paramount and said, you know, we don't really know. We're really bearish on Paramount and what they want to do with their streaming. And what I think Paramount really has going for them is that not only are they a great streaming service, and they're building a great streaming services, and their numbers are increasing every single quarter, but they're also a great seller. They're someone who can license really in-demand content to Netflix and to other players and charge a hefty fee for that because their content is so in demand, which means that people will pay to have access to it. So when I think we look at Paramount, you know, if the question 3, 4 years ago, even 2 years ago, the question was, which are the 3 services that people sign up for? And it used to be Disney Plus, Netflix, and HBO Max. I think as the streaming wars, which is really just a colloquial term for proper competition in the marketplace, as opposed to Netflix having a almost monopolization on the entire industry, I think what you'll start to see is a company like Paramount that can offer really great pricing on the ad front and also on the sub front, that has shows that people really want, that has the film franchises that people really want, I think you'll start to see them emerge as a really strong contender in the same way that I really have faith that HBO Max under Zaslav and even HBO Max under Jason Kilar, the former CEO, I think that's a great product, and combining Discovery and HBO Max offerings in a really smart strategic way that feels curated and human, but also scaled. Zaslav's CEO, David Zaslav's real game is what is the actual value of this content? How do we go through HBO Max and cull some of it and Discovery Plus and accessible? I think that's really going to help them even maybe not surpass Netflix in terms of subscribers in the next few years, but definitely be worthwhile contenders.
So are you saying if you're a betting person, you should be spreading your bets right now?
I would spread my bets a little bit. Yeah, I think it's too early. You know, it's funny. I think we're trying to declare a winner in the streaming wars. Again, that term that really just means competition is happening, and it's far too early. We really need to see what a lot of these companies that have theatrical studio components, that have linear networks, we need to see what their strategy is for handling all that type of content across a bunch of different revenue streams. And I think the key takeaway from what we're seeing as subscriber growth in the United States kind of slows down a little bit, kind of hits a bit of a peak for certain streaming services. I do think the takeaway is that streaming is not necessarily the end game for a lot of these companies, but it is a very important support system for a lot of its other different investment areas. And I think that's really key, because it used to be that streaming was the only option. 2-3 years ago, everything was streaming. And now it's, well, everything is also includes streaming.
What about Disney coming up next week? What are you expecting there? It's been a tough ride for Bob Chapek.
It's been a ride. It's been a ride for Bob Chapek. My major concern with Disney is the promise, or the projection, I should say, that Bob Chapek and his team gave to the street of 230 to 260 million subscribers globally by fiscal year 2024. It's ambitious. That's an average of about 10 million subscribers per quarter being added. And eventually you run out of countries to launch in, right? That's kind of a guaranteed subscriber base. When you launch a new country, customers will sign up. So my biggest concern is what Disney will have to do on the Disney Plus front to really hit those projections, unless they come in, next week and say we're changing our projections. But I really don't think that's going to be the case. As long as Disney has families and Marvel fans and Star Wars fans, they're going to continue to be a well-supported streaming service. But I think the bigger question now is, to hit those numbers, you have to increase your total addressable market, which means bringing more Hamilton, right? Bringing more of that, bringing more of the West Side Story into the Disney Plus sphere so that people can watch it. And I think in the United States, when you have Hulu, that becomes a really interesting conversation with what goes to Hulu, what goes to Disney Plus, and both are designed to support the bundle. And so globally, I think is where we're going to see what the future of Disney Plus really looks like under the Star and Star Plus banner, where we can see how Disney, a much more 4-quadrant design Disney Plus, can operate in both acquiring subscribers and then retaining them.